The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady. And this is our hour to talk taxes. And if you're one of the lucky people getting love letters from the IRS or the state of New York, you want to make sure that you listen in because we want to help you. And, of course, I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you. And Christopher.
Hello, Esther.
Hello. And, of course, we spent the day going to the graduation of two of my granddaughters, Casey Pakanowski and Grace Fabian. Grace Fabian, would she be related to you?
She is. That's our daughter.
At least
she's horns up. She is a proud graduate of University of Buffalo, which is one of the most amazing universities we have right in our backyard. And so I couldn't be prouder, not only of her scholastically, but of the person that she is. She is just a sweetheart, and she's always giving. And I just, she'll be a great asset to the business community and to anybody that she serves.
Right, absolutely. She really is. And Casey, of course, she was summa cum laude. She had
the highest GPA.
The three stars.
Yeah.
So, so two smart girls are going to both be CPAs. I wonder what business they're going into. Right?
Accounting.
Yes, it comes by them naturally. So very proud of Casey Pakanowski and Grace Fabian and all the other graduates from UB. It was just wonderful to watch all those people with all that great future in front of them.
Yep.
Right?
Yep.
And you think to yourself, what will they do with that future?
Right. Right.
What will they do?
Right.
Well, that's what the gentleman said. What now?
Right.
What now? What do we do now?
Yep.
You got to make life.
Yeah. It's tough. It's tough. Anyway, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And Frank said maybe the phone lines don't work, so maybe you got to rely on the text. Love to hear from you, though. Our show today, and I just every week I try to think of something that I think would be interesting for people. In the world of taxes, things are not as they seem. And so I thought we'd kind of rip apart some of the things in tax law that people think is going to work for them, and they really don't. Right?
That's right. And so many times before people do these things, we wish they would give us a phone call and just take a breather and pause before you do some of these things and reflect
because
on.
you think it's A plus B equals C, but it's more like A plus B equals Q, and it doesn't work out the way you think. So I thought we'd talk about that today and kind of dispel people's thoughts of these things. First of all, itemizing deductions. Now, we know that the standard deduction is $25,900 if you're filing a joint return, and half that amount if you're single.
Right.
So till you come up with, till your itemized deductions exceed the standard deduction, you don't save any money.
Necessarily. Not necessarily.
Okay.
Well, because, like you said, it's not always what it seems. The federal government is so high.
Okay, but you're talking about the state of New York.
Right. So I just don't want people out there to
I was going to
not.
get there. I was going to get there, Chris.
Well, I beat you.
No, but you're
beat
absolutely
you.
right. So on the federal return, the standard deduction is $25,900 if you're married filing a joint return for 2022. Half of that if you're single. But the state of New York's standard deduction is nowhere near that.
Right. And so many of my single and married couples, if they have a house or they're charitable folks, they are definitely itemizing on the state. And then the nice thing on the state is you could also deduct your job expenses, which is another benefit thing that pushes you over often.
Right? So, Chris, you got anything else to say?
On the itemized deductions?
No, I mean specifically about the standard deduction. So, for instance, what makes up an itemized deduction is medical, taxes, charity, mortgage interest, miscellaneous itemized deduction, and casualty loss, right?
Right.
So, now, many people think, I just had a call yesterday that somebody said, my cost of prescriptions are going to go up $100 a month, $1,200 a year. Is it deductible? Is it deductible?
Possibly.
Well, it is deductible, but will she get any benefit for it? That's the possibly, right?
Right.
Because in order for your medical expenses to become part of the itemized deduction, it has to exceed 7.5% of your adjusted gross income.
Right.
Correct.
That's
Right?
right. Anything over it starts the clock a ticking.
So if your income's $50,000 and your medical expenses are under $37.50, which is 7.5%, you get no benefit for your medical expenses,
Correct.
right?
Yep.
So a lot of people don't realize that what they ought to do if they're being limited by their 7.5% is kind of fend off the payment of that medical until next year so they can double deduct.
Yep, I was thinking the same thing. So maybe you're having some dental implants done in 2022, and so you might want to get those glasses that year, and you might want to get that surgery done that you were putting off, and so bulk up the year that you have a big expense.
Well, even if you had it done in 2022, but you paid the bill in 2023,
That's right.
it's when you pay the bill,
Right. Cash basis.
right?
Absolutely. Or if you pay it for one of your kids or your dependents or your non-dependent that you support.
Then it would be an itemized deduction as well. Okay, then the second thing is taxes, which are your property taxes, your foreign taxes, your sales taxes, right?
Right.
That's the second part of the itemized deduction, but there's a kicker there too. And that would be what?
The cap of $10,000
That's right, the
in
salt.
that section, the salt.
State and local
And what if you're
taxes.
married filing a separate return?
5,000.
$5,000.
And the texter just said, on the itemized state, you cannot claim your property taxes.
That's not true.
Right.
Absolutely
You
not
can't
true.
claim your state
You can't
withholdings.
take, right. You can't take your state withholding,
But you can
you can take your property taxes. So I don't know where you got that information from, but maybe you want to call us at 632-7886 on Monday, and we'll show you where
Or you can call the show at
right.
803-0930.
You can't take your state withholding, but you can take your property taxes.
Right.
Right?
Yep.
And so here's the other thing with itemizing your deductions. If you're married filing a separate return, then you're limited to not 10, but 5,000.
Correct.
But if you were two singles living in the house,
You
what
get
could
10.
you take?
20.
Each would get 10 and
10
10.
Right, you'd get 20. So things are not what they seem. So a lot of times people say, well, I'm going to be married and I'm going to save money in taxes. Is that true?
No. It's not. Quite often, it's not true. It's
So
usually
many times you're penalized. Actually, the entire tax code penalizes you for being married filing a joint return. Two singles would do better than a married couple. And that doesn't mean I'm against being married, because I am a believer and I absolutely think that you should be married. But I'm going to tell you, from a tax standpoint, that's not the truth.
Well, even I have many clients who don't get married because then if they did, their kids wouldn't qualify for TAP and Pell.
And that's all, and that's some of the things I wanted to show people
Right.
as we walk through the tax code today. 8030930, 8030930, star 930 on a cell phone, and if the phones aren't working, you can text us at 716-8030930. We're going to take a short break. I'm Esther Gullius, the tax lady. I'll talk to you on the other side.
We are family. I got all my sisters with me.
Hey, to us, you are family. I'm Esther Gullius, the tax lady, and I'm excited about taxes whenever, because what we create right now has an effect in 2023. So we
Right.
want to keep you abreast. And so kind of marching through the itemized deduction. But of course, as we move along, it's going to, there's other things that we're going to discover in the tax code. But moving on with after taxes is mortgage interest.
Right.
Now, you are allowed to take as an itemized deduction the mortgage interest you paid on your primary home and secondary home, right? Including home equity credit lines on your primary and secondary loan, provided it was used for the improvement of that primary or secondary home.
Right. Or also a boat or an RV.
Right, which would be a secondary home
Right. But just making sure
if it has
people
a potty
understand
and a bathroom. Right,
But you
absolutely.
can't use it anymore to pay off credit card debt.
And I'm going to
or-
tell you, those of you that haven't refinanced, that have interest rates are 7 and 8%, that could have refinanced at 2%, and it's now at 4%. You better do it now.
Yeah, Jesse from Cross State Funding is going to be on at the end of June, but you could call him sooner, and he is amazing at refinancing.
I'm going to tell you, you're just throwing money away if you don't refinance right now.
Yep.
Honest to God. Okay, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and our phones are working, so I'm going to talk to Marty. Hi, Marty. How can I help? How can we help you?
Yes, Esther. I have my insurance company told me quite the opposite of what you just stated in regards to when you receive and pay the bill, as opposed to when the bill was original. Like if you had a surgery and say 2021, but it seems lately that we're not getting our bills till maybe 5 or
Okay. So you're talking about the interest from you because you put it on a credit card, right?
No, I'm talking about
Your insurance.
medical.
It's when you pay your bill that's deductible, not when it is billed to you.
Okay, because we're being told quite the opposite. And this is happening.
Well, your insurance company has nothing to do with the tax code, quite frankly. And it's when you pay your medical expenses that are deductible because you're a cash basis taxpayer.
Okay, all right, that's
But you can't deduct your medical insurance that you get from work because that's pre-tax dollars.
But that's not what you're talking about. You're talking about just insurance reimbursement, right, Marty?
well. When you reach your your maximum with insurance companies now, there's a great deal of money that's invested in terms of meeting your maximum for.
You're
For the
deductible.
high deductible
Right.
plans.
Well, but again, as an itemized deduction, it's when you pay that medical expense or any expenses for that matter, whether it's property taxes, whether it's medical, whether it's charitable, it's when you pay the bill that makes it deductible.
Okay, that's interesting.
And actually, if you'd like us, call us on Monday at 632-7886, and we'll email you the tax code,
Okay,
which then you can send to your insurance guy.
company is not doing that. Our maximum deductible is not being based upon.
Well, remember, you don't want to compare apples to oranges. So if this is something about your insurance company saying to meet your floor, that's one thing. I'm talking about the deductibility on your income tax return for medical, not your insurance.
Okay, so
Okay?
so it doesn't matter then if they bill you 6 months later.
It's when you physically pay the bill.
That's the irony of what I'm talking about. We're not receiving bills for 6 months after a surgery, and they're not being adjusted. I don't care whether it's through state, federal, or whether it goes against your maximum deductibility.
Okay, but again, when you pay your bill, it makes it deductible. So if they bill you in June and you pay it in January the next year, then it's deductible on the next year's tax return.
Okay.
Okay?
All right. Thank you.
Thanks, Marty. Thanks for the call.
All your mind.
All right, and so,
Yeah,
all right,
give us
things
a
are not
buzz.
as they seem. And here's the big one for itemized deductions is charity. I've had people say to me, I'm going to Hi, Esther. I'm going to be giving my Cadillac away to one of the charities, and I just want to know how much I'm going to save in taxes. And the truth of the matter is, if you cannot come up to that standard deduction, the 25.9, if you're married filing a joint return, then let's say your Cadillac is worth $10,000 and the charity sends you a receipt that says it's worth $10,000. That's what they sold it at auction. You're going to get a deduction of how much, Chris, Tiff?
If they sell it for 10, you said?
Yeah.
Your deduction, if you're in the 12% bracket,
you
would be.
can't
No,
itemize,
your
she said.
deduction. Your
She said-
deduction
she
on
said
Schedule
If
A.
you can't itemize.
Oh, then it's nothing. It
No,
saves you
if
nothing.
if they gave you a receipt for 10, how much would you take on the Schedule A?
Whatever they sell it for.
The 10,000.
10,000,
right?
right.
Yeah. Now, the question is, if you don't come up to the standard deduction, how much do you save in taxes?
Nothing.
Nothing. That's exactly right. And that's what a lot of people don't understand. If you're not able to come up to that standard deduction and you give that car to charity, you get no benefit at all.
Right.
So, and I've said to clients, well, why are you giving it away to charity? Not that I'm against giving to charities, because I absolutely am for that. But if you're giving it away because you think you're going to save $10,000 in taxes, because that's what people think, you're not going to save anything, and you've basically given away an asset that if you had sold it in a trade-in, you would have gotten $10,000. And if you would have sold it in a trade-in, how much would it have cost you in taxes?
Nothing.
Nothing.
Because you're not making a profit.
That's
on
right.
It.
So had you taken that $10,000 car, sold it to a dealership, they gave you $10,000 real money, you would have paid zero income taxes. If you give it to a charity, if you can't come up to the standard deduction, you save nothing.
Right.
Yeah.
And even if you were to itemize and you're in the 20% bracket, 22% bracket, that $10,000 donation is only saving you $2,200.
If you came up to the
if you can
standard
itemize,
deduction. Right.
and it helped.
So let's say that you gave that $10,000 Cadillac to the charity, and your itemized deductions wasn't 25.9, which is standard deduction. It was 26.1. So it was over by $200, right?
So you save about $20.
You
or something?
saved $20.
Yeah. Not so wonderful.
So I think it's, knowledge is power. And that's part of what we want to do is we want you to understand how the bumper shots happen in the world of taxation, because it isn't what you think.
Yeah, they changed the law a few years ago, more than a few years ago, on charity deductions of cars that you give. You can't deduct it until they either sell it at an auction or else they use it at the charity,
in the ministry, right.
at the charity or at the ministry, and
Right.
so then it's the value of the car if they use it in the ministry.
Okay, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. What do we got, Tiff?
It says, I do side work as an independent contractor. I think that's what it's called. They don't take taxes out, nor do I get a W-2. Is there a certain amount I should have to make before I have to claim that on my taxes?
Okay, break this guy's heart.
You have to declare all of it, any
Right.
of it.
Absolutely. Now, you declare it all on what form, Chris?
A Schedule C.
And you get to reduce the income that they gave you by your expenses,
Expenses.
right? So let's say that you made $10,000 working as an independent contractor, and you had travel, and you paid rent, and you had to buy supplies,
Insurance.
and you had to use your cell phone, and you had liability insurance, and et cetera, educational expenses, continuing education. You had travel out of town, and so your expenses were $8,000. Well, the $8,000 from the 10 means that all you have left is $2,000, where you'd have to pay both income taxes and FICA.
Right. That's right.
So whatever you get is potentially taxable, and you reduce that by your expenses, and it's done on a Schedule C.
yeah,
And
really good question.
you know, how many people like like this gentleman who says, "Oh, I didn't get anything, I don't have to report it," but after their expenses they have a loss. So that would have only benefited them.
because they would have reduced the other income by the
Right,
loss.
right.
But let's just talk about this guy, the independent contractor. Let's say this is his only source of income, and he grows $10,000 at $8,000 in expenses. He'd have a $2,000 net profit. What else would he qualify for?
Earned income
An earned income
credit.
credit. So they actually would give this person refunds because he qualifies, and that's another thing with taxes. It isn't what you think.
Yep.
A lot of times people say, I don't have to file because I don't have enough money to file, which is true. But what people don't realize is in the tax code is built in these credits where they give you money
Correct. So you'd be shooting yourself in the foot by
if you
not
didn't
filing.
file,
Yep.
right?
Yep.
Okay, let's quickly go to our other.
There's a few texts. You want those?
Yeah, let's do the first, and then we'll break for
Esther,
news.
my daughter Lisa sent you an email in regards to becoming a 1099 to help with itemizing. Do you remember getting it? She is away today and asked me to text you. Thanks. We live in Florida.
No.
What does
I
that mean,
answer
becoming a 1099? Regards to becoming a self-employed? Is that
Well,
what she
she's
means?
self-employed, but I don't know. So you're going to, whoever you are, please
Want me to text
elaborate
them?
because
Want
I
me to text
answer.
them your
I
number?
answer all my emails.
Want me to text them your cell phone number? Or?
Yeah, text them my cell phone number.
Okay. And then there's a question about married filing separate. We'll do after the break.
All right. So I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 cell phone. You can text us at 716 8030930, and my cell phone number is 716-472-7444. You can text me on that anytime. We're going to take a short break. We're going to after the news, we'll be back with your calls and your texts. Thanks for listening.
We are family. I got all my sisters with me.
Hey, to us, your family. And if you're so lucky to be getting love letters from the state or federal, or you haven't gotten your refund, and like last week we told you that they destroyed, was it 3 million or 30
30 million.
30 million tax returns that were paper. Look, we're here to help you. I'm Esther Golias, the tax lady from EG Tax. And if you need any help, you can call us at our corporate headquarters. You can go to egtax.com. And right now, if you want to join us, 8030930, 8030930, star 930 on a cell phone, and text us at 716-8030930. We have a mystery text here. I don't understand.
They said filing married, filing separate because of student loans over $120,000, income from Social Security and pension from both of us.
And so what does that mean?
It's
Well, if
like
you're
part
married
of its
filing
master
separately,
provision.
you don't get they are because of student loans.
Right,
They
so the
to
payment
reduce
reduced.
reduction of the payment.
Right.
But-
So are they wondering
If you
it's
could,
not
whoever you
benefiting them?
are, give us the rest of the story because all we got is one line.
We did. We're missing part of the story.
All right. And so, what were we talking about? Oh, and again, the lady that lives in Florida. I don't know if
She
if you're
texted me.
I did.
She texted me.
Did she? And
she
said,
did. She said, "Thank you. I told my daughter. I know for a fact that Esther answers all of her emails. I will pass this info."
Now, I
onto
did
my
an
daughter."
amended return for a daughter of somebody in Florida, but that was 2 days ago. So I'm sure the mother knew about it because she texted me. So
Right.
this must be somebody else. But again, text me and I do answer all my emails. So, but
Indeed.
sometimes, they go into spam.
Correct.
And I don't do a lot of spam shopping. So, and so but the other thing is you can always call me at the corporate headquarters and you can talk to Amy and say, I emailed your mom the other day and she hasn't gotten back to me, and we will get to the bottom of it.
Yep.
Right?
Certainly will.
All right. Things are not what they seem. How about the wonderful senior citizen that goes to the casino and wins some money? I had somebody the other day. She said, "I won $2,000. Do I have to save my losing tickets?" What do you say to that lady?
Or I have people who are like, I went to the casino with a friend and they put the winnings in my social.
Well, I don't even want to go there. So, okay. So this particular lady won $2,000, and she said, should she save all of her lottery losses to reduce that gambling income.
Well, the
Remember,
losses,
things are not what they seem.
The losses are tucked away under itemized deductions, so you don't subtract it off the top. So unless you itemize, it's not going to even help having the losses. And so a lot of people think you get to subtract the losses off your winnings, and that's the net, and you declare that as income. But that's not the case. It's all of the winnings. And then if you itemize, you get to increase your deduction by your losses.
So this particular lady was a senior, so she was single.
Right.
And so her standard deduction is $14,700. Unless her itemized deductions come up over $14,700, then her $2,000 gambling losses are kind of ignored, right, so to speak. So if she had no charity, let's say $2,000 in state sales taxes or property taxes. Let's say it was $5,000, okay, and no mortgage interest, and let's say $5,000 in charity because she's very generous. That's $10,000, and if she saved up her losers, she's allowed to have losers up to $2,000, which would be $12,000. Her standard deduction's $14,750, so she's going to get no benefit for saving up those losing
and
tickets.
then don't forget, under the new law, you can actually deduct your travel. So if you're flying to Las Vegas or if you rent a car, you could also deduct your
I know, but
travel.
she's way far off of 14,700, right?
Yeah.
So that's the reality. Unless you can come up to over your standard deduction, it makes no difference. Now, what's the other part that's really sad for her, Chris?
Or Social Security.
Well, yeah, it will could make more of her Social Security taxable.
Now, how could that be?
Because Social Security goes by page 1, which is just your income. So if your income plus half your Social Security,
So she's got an extra 2, right?
right? So if that's increase and that brings her total, adds her income plus half her Social Security. If she's single, over $25,000, then her Social Security starts to become taxable or make even more of it taxable. So on that $2,000, it could actually make $1,700 of her Social Security more taxable.
Right.
So not only is the 2 she's paying tax on, but another $1,700.
So a $3,750 extra,
Yeah.
right? And if she's in the 10% bracket, she pays an extra $375 in federal taxes.
Right. And, and as long as we're on the gambling and not what it seems, how many older people have we seen, that's what they do for fun. And their gambling winnings are $160,000 or something like that. What, not only are they, but I got my losses, but what else did that impact? Is their Medicare.
Right, absolutely.
Where now they're probably going to have to pay $400 a month for Medicare.
And I know this is, so if you're driving your car and you want to smash into a telephone pole because you think, oh my God, this is terrible, this is how the tax code works.
Correct.
So when you go into the casino, and you're on Social Security, you have to understand that this could really negatively affect your income tax.
Yep.
Right?
Indeed.
Yeah, I know. I tell my seniors either switch to an iPad because it's free or play the penny slots and don't hit the maximum bet so you don't get the big jackpots.
Right.
I know somebody who won over $1 million on slots this year.
Really?
His losses were way more than that. The federal,
Well, he at least was able to itemize.
well, on the federal,
The state.
New
Right, the
York
state of New York,
State
right.
backs away your gambling losses after a little bit.
Right.
So this gentleman ended up paying New York State over $150,000
On losses.
on the gambling winnings, that even though he lost more than he won.
Yep.
So you got to be very careful.
You really do. So things are not what they seem. And that's why, when you're thinking of something, give us a call. There's no charge. I just did a consultation with somebody yesterday, and he says, I feel like I'm a crook. I'm not paying you. And I said, we don't charge you.
Mm-hmm.
And he said, how can you guys stay in business? I said, we do taxes, and then our counseling we do at no charge.
Right.
All right, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we have Amy. Hi, Amy. How can we help you?
Hi, I'm Christopher does my taxes, and I just met with him on Thursday, but I received something in the mail today.
Wow, what a lucky day.
Yeah. From New York State Department of Labor. And it's saying that our records show that you received pandemic unemployment.
Everybody's getting
Wait,
these
we got to
letters.
talk about that too.
Everybody's
But
getting
you
these
didn't
letters.
get unemployment.
Exactly. And I received back in 2021, in March of 2021, I received a letter saying your claim for unemployment
Somebody
or
was scamming her. Yep.
assistance is pending. And I had gone online and I filled out the fraud form. And then I received another letter in April of 2021, saying follow these instructions. How do I get my benefits? Well, like you said, I worked all through the pandemic, so I don't know if this is a scam.
Okay, it's a scam. So somebody used your identity and collected unemployment.
You have to address
And
it.
so we'll
Again.
make sure if you need help, Amy, give us a call on Monday, and we will correspond with the state of New York to try to clear up the fact that they may have gotten unemployment with your name and Social Security, but you didn't get the benefits.
Correct.
Okay?
Yep.
All right, Amy.
Okay, thank you.
All right, boy, that's a tough one. And that's something that's happening right now. People that easily collected unemployment after the pandemic, everybody thought, wow, look at how easy it is to get unemployment. What's happening now?
They want you to prove that you had worked the amount of hours
Or were
quarters
self-employed.
to substantiate getting the unemployment.
And so EG Tax will be very happy to help you to answer those inquiries by the state of New York. Now, we cannot get you out of incorrectly claimed unemployment, but we will make sure that the correspondence that you send into New York State is done accurately so that if you don't have to pay back the unemployment, that we're getting you out of a mess. But more than anything, if you're somebody that's gotten that letter, do not ignore the letter.
Right? Because if you ignore it, they're going to send you a big bill saying, guess what? You owe us $25,000 to $50,000 back plus penalties and interest. So
Yeah. And then, but now this Amy who called is a horse of a different color. This is not her substantiating money she got. It's
Money that
addressing
somebody
a
got in her
fraud.
name. Right.
So call us and we'll make sure that we address that issue. And then also things are not as you'd seem, and so you really want to.
So that was another thing. Things are not as they seem. When it was easy to collect the unemployment. It was interesting because I had thought to myself, how is it that the state of New York is so cavalierly giving this kind of money? Now, unfortunately, if you can't prove that you did qualify using more stringent criteria for collecting, you're going to owe it back.
Yep. I mean, I'll be doing tax returns for people, and they got $40,000 in unemployment, and they said to me, "Oh, and I just filed for Social Security disability." So I would think to myself, are they able to substantiate the unemployment that they got? And so New York State, unbeknownst to us doing it, are dotting their I's and crossing their T's,
right.
and making sure that.
And let's face it, they'll get it back with penalty and interest, right? Mm-hmm. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930. We're going to take a short break, and we'll be back with your calls and texts on the other side.
We are family. I got all my sisters with me.
Hey, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, 716-8030930 is our text number. All right, we got a...
The text says, I thought if you were over 70, your income was not limited. Or your income was
No,
limited?
I'm going to tell you, as long as you got income, then you have to file a tax return. And maybe you don't have to file a tax return, but you're still working, and they would give you an earned income credit, which means that they'll give you money back that you didn't pay in. right?
Yeah, that's like
So no, your age has nothing to do with it. It has to do with the income that you receive.
absolutely.
All right. And
Well-
the other thing, we have another text from a gentleman that's been corresponding with Chris and the state of New York. And I guess Tammy may maybe not have given you all the messages, but everything's been sent in, right, Chris?
Everything's been sent in. It does take the New York State time to put it in their system and get it updated. It's not, unfortunately, I wish it was a fast turnaround for situations to get resolved. But we've known, Tiff, right, when we call, whether the federal or New York State, that you got to give us time to get it in our system. So
And then
But again,
also
if
Chris's
he
dad
asks
just
for, again, anytime that anybody that's trying to get a hold of Tip for Chris, if they find it that it's unsuccessful because they're busy with clients all the time, you can always go to and talk to me. Right? Because
Yeah,
I love to talk to clients.
You do.
And my phone number is 472-7444. So there's my number, and anybody that needs me,
You're going to get all these.
I don't care because I want to help people.
Right.
That's what I'm all about. Okay, let's go back to the phones. We got Joel. Hey, Joel, how can we help you, sir?
Hi, Esther. Quick question. I have an irrevocable family trust,
Okay,
and my kids are my trustees.
okay.
I used to get a star. Will I still get that or no?
Well, does the irrevocable trust own the property?
Yes.
I would think not. Don't you guys agree
I
with that?
would agree because
Because
that's
it isn't owned by you anymore.
Right.
But the best thing to do is call the city and make sure. But you don't own when you put an asset in the trust owns the asset, and the STAR program is designed to give a benefit to an individual and not to a trust.
And I'm still paying all the bills. So
But you put it in a trust.
the trust should be
The
paying.
trust owns it. The trust should be paying the bills. Chris is absolutely right.
Now, was it a life estate?
yes.
Oh, that's
different.
You said an irrevocable trust.
If it's a life estate, it's still in your name.
Then you would
and
get
you,
the trust.
you get the
You-
benefits
right.
of the star and veterans and stuff like that. But if it's in solely just in a trust,
Irrevocable.
an irrevocable trust, that's a different entity that owns it. It's like a corporation would own it. So there would be no benefits for the star or anything like that.
I'm going to look at it. I'm almost positive it's
Well, talk to your attorney, Joe.
okay.
Okay?
Will do. Thank you.
Thank you, sir. All right, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, 716-8030930. Okay, things are not as they seem. If you give a gift, let's say that you have an RMD, required minimum distribution, and your RMD is $20,000. If you take your RMD out, the $20,000, you're going to pay taxes on the $20,000, right?
Right.
And if you then say, I'm going to give that $20,000 to a charity, then you get an itemized deduction for $20,000 less over your standard deduction,
If
right?
you give it to a
But
charity.
if you did a direct
No.
rollover
Right.
from your IRA RMD to the charity, the entire amount is completely tax-free. And if
Right.
people don't know about it, then they're not going to be very happy. So it's very important. If you're somebody that is philanthropic and you want to deal with your RMD without it being taxable, do a direct rollover.
Right. And you don't then get the charity deduction.
You don't, because it's going to be completely tax-free.
Right.
All right? And let's go back to the phones. We're going to talk to John. Hi, John. How can we help you?
Yeah, I got a question on RMDs.
Yeah, well, perfect.
Okay, say for 2021, you have to pull out $20,000
Okay.
in the traditional IRA,
Yep.
and 2022, you're mostly vested in equities, and the market went down,
Right.
and you're not able to meet the $20,000. So, what recourse do you have?
Okay, so in 2021, you had to take out 20,000.
Right.
And you did that, right?
No.
You didn't do it in 2021.
Still waiting.
Still
Wait,
waiting.
why
So
did you not-
remember, if you had to do an RMD in 2021, you did it in 2021.
Well,
Because if you didn't, then you'd have a penalty of 50% of the amount you didn't take out.
no, I'm saying based on 2021 earnings, I have 20,000 to take out in 2022.
So based on your year
All right, your
end
1231 figure. Right.
Right.
And then the damn thing went down, right?
Right.
Well, you have to do your RMD based upon the 1231 figure.
You do?
You do.
Yep.
Well, what if you can't make it? Let's say all your money is tied up in equities.
You're going to have to sell some of your equities in order to pay that RMD.
And if you can make it by selling it,
Well, I mean, whatever way you can get for you don't have. It doesn't have to be specifically out of the IRA. It can be out of your savings account. It can be out of an other equity account.
In an IRA.
But you have to come up with that money for an RMD. You have to do that distribution, and you have to pay the liability. That's what the law is. Otherwise, you have a 50% penalty.
so you have to meet the requirement.
You have to meet the requirement.
Okay.
All right, John?
Very much.
I would
thank
call
you,
your
sir.
broker.
Yeah. The sad thing is, I mean, who knows? I mean, if the market keeps taking a dumper, it's not unlike them towards the end of the year to say, wait, a lot of people are complaining and we're not going to make them do the RMD. Is that not true, Chris? I mean, you
Right.
wouldn't want to go to the bank on it.
Right. I mean, yeah,
But it is possible.
2 years ago, they did waive the RMD. We haven't heard anything
Right. Now, I'm
like
not
that.
saying they're going to do that, and I
Yep.
certainly wouldn't want John to go to the bank on
Right.
that.
Yep.
But
Yep.
but I guess I would wait as long as I possibly can to see if the market rebounds. I
Right.
mean, just because I don't have any confidence that the market's going to rebound,
Right.
but I mean, it may.
Yep. You don't have a
But
crystal
you
ball.
do have to do your RMD based upon the 1231 previous year balance.
There's a
line.
texter. It
Yeah.
says, "Can you explain again how the IRS ripped up paper returns?"
Well, people that did paper returns, the IRS got so far behind because of COVID and staffing problems that
Working from
they
home.
totally trashed 30 million tax returns about 2 months ago.
Right.
So if you've been sitting there waiting every day looking at the mailman, I hope they bring my money today.
This is why you
it
should
may
do it
be that
electronically.
they're not going to be bringing your money today, and you might have to resubmit that return electronically, and of course we can help you. Now, everything I read said it was all informational return. Everything I saw, it made it sound like it was not income tax returns, but one doesn't know.
Yeah, it gives you a lot of confidence in the IRS,
Right.
doesn't it? Lots of confidence. And so you could
All
give
right.
us a call.
Now,
I could do a Form 911.
Frank, is this a different John from
It's a different
Tonawanda?
John.
No kidding. I got a different John from Tonawanda. Hey, John from Tonawanda, how can we help you, sir?
Hi, Esther.
Hi.
I wanted to find out if you or Chris have heard anything more with the IRS on taxing unrealized gains. I'll hang up and listen to your
Yeah, okay. Well, so far, nothing. I mean, right now, I think that I thought they were going to really be putting the hammer to people, taxpayers, last year. That was everything that I saw.
Well, that was
But-
in the infrastructure bill that got voted
But
down.
right now, nothing. And so don't talk about it. Let's not give them any ideas. But it's remarkable
Thank
when you're
goodness.
looking for money, how they're looking for money in all the wrong places, right? Okay, other things that are not what they seem. Do you know you can, like, for instance, now the LPGA, is it the PGA? PLG is coming to Rochester
The
again.
PGA.
Oakland.
Yeah.
Oak Hill.
Oak Hill. I know it's something Oak. There, and so people that live in Rochester, if they rent out their house for 2 weeks or less, the money they get for renting out their house is completely tax-free.
Woohoo.
So I said to my son-in-law today, I said, have you thought of renting out your house? They probably could get $20,000 for it, tax-free.
God.
People don't know that,
Yeah, absolutely.
right? Okay, what else we got?
It said I owe another $600 due to the recovery rebate credit claimed. My records show I didn't get the third stimulus, which was $1,400. It seems like they think I did.
They think, right, okay. So
But the third stimulus was 1400.
what you want to do is, I would suggest they talk to somebody directly at the IRS to see, because they will give you chapter and verse as to when it was sent to them.
Fill out a 3911, which is a missing refund or a missing stimulus check. So again, fill out Google IRS form 3911, and they will, like Esther said, send you chapter and verse of where
when they
you're-
deposited
Yep,
the money.
yep.
Now, it is entirely possible that they sent the money maybe in a check form and somebody took it out of your mailbox and forged it. Then you can pursue it.
Yep.
But if they say they sent it to you on February the 15th and you look on the check and you signed the puppy, right?
Yeah, because life gets busy and sometimes that happens.
Right,
You know?
and you would forget.
Yeah. And
Right. I
there's-
just fixed a return the other day for a little girl that put $1,400 down, but they said, we sent it to you. You cannot get it twice.
There's a caller coming in. I
All
don't
right.
know if we can sneak it
I don't
in.
know. I don't know. Frank, can we do this? Frank is talking. I don't know. Anyway, if during the week you have any calls, you can go to our website at egtax.com. We are happy to help you.
Oh, there's Dolores.
Oh, wait. I'm going to grab Dolores really quickly. Hi, Dolores. How can I help you?
I did my 2018 taxes with EG Tax.
Okay.
And what I had was a receipt from the RMD withdrawal for a total of $5,000 more because I did a direct pay to my charity.
Okay. You did a rollover. Okay.
But what the bank did that I withdrew my money from, they put it on that little funny sheet that you give.
1099-R.
Whatever they are. What do I do about that?
All right, but we did the return, right?
Yes.
Didn't we take into consideration that when we did the return?
And didn't make it taxable?
She took off the $5,000.
That's exactly the way it's supposed to be done.
And that's okay. I don't.
That's all. You don't have to do anything, Dolores. You can sleep tonight.
Okay.
Okay, dear. Thank you. Well, that was good. That was easy.
That was.
Okay. If you have questions during the week, you're getting bills, you haven't gotten your refund, you've got questions. One of the things I wanted to make sure, if you are tempted to take money out of your IRA or pension, please call us first.
Things are not as
They're
they
not
would appear.
as they seem. We will give you. I just gave somebody, and he wanted to take $400,000 out of his IRA and move it into a Roth. And I said, that's great. You'll only owe $180,000 in taxes. And he said, oh, that doesn't sound like a good plan at all. But that's part of what we're there for. So we're here to help you. Until next week, I'm Esther Gullius, the tax lady, Christopher Fabian, Tiffany Fabian. Congratulations on all the graduates, especially my two granddaughters. Thanks for listening. Bye-bye.